Welcome to the deep dive. We've got some really interesting material you sent over this time, all about trading financial assets.
Yeah, it's a fascinating world.
So let's dive right in. When people talk about trading, what are we actually, discussing?
Well, essentially, it's the act of buying and selling, things like stocks, maybe currencies, commodities.
Okay.
And the whole point is trying to profit from short-term price swings. It's very active, lots of decisions, quickly.
Right. Very hands-on. Sounds intense.
It can be. You're constantly watching the market.
Now, the big question that came up in the sources was, is this actually a skill? Like, can you get good at it consistently?
That's the million-dollar question, isn't it?
Yeah.
The material definitely argues, yes, it is a skill.
Okay.
It talks about needing real market knowledge, understanding why prices move, and then there's technical analysis.
Ah, yes. Technical analysis, charts
Sure.
and lines and...
Pretty much looking at past price patterns, trends, trying to predict or at least anticipate future moves.
But it's more than just reading charts, I guess.
Oh, definitely. The sources really emphasize mastering those tools, but also, crucially, risk management. Protecting your money.
Makes sense. You need rules.
And discipline. Emotional control is huge. Keeping calm when the market goes wild.
Right.
The material suggests learning all this. It takes time. We're talking months, easily, maybe even years.
Wow, months to years. That's quite a commitment.
It really is.
And that brings me to a statistic in there that, honestly, it kind of stopped me. Something like only 10 to 20% of active traders actually beat the market long term.
Yeah, that figure pops up a lot in studies. Consistently outperform the average market return. Very few manage it.
So the idea of trading being some kind of easy money path is, well, maybe not so accurate.
Not really, no. It shows that even with skills, beating the market consistently is incredibly tough. Most people who try actually end up doing worse than if they just, say, bought a simple market index fund.
Okay, so that's trading. High intensity, high skill required, high risk. But the material also drew a clear line between that and investing. How's investing different then?
Investing, as described in the sources, is much more long-term, less active.
Less frantic buying and selling.
Right. Investors usually buy things like diversified funds, index funds, think the S&P 500, and they plan to hold them for years, sometimes decades, riding out the ups and downs.
And the returns. The sources mentioned historical averages.
Yeah, historically, something like the S&P 500 has returned around, say, 7 to 10% per year after inflation, on average over long periods.
Okay, so maybe slower, less dramatic gains compared to a huge trading win.
Potentially, yes.
But it sounds like lower risk and, importantly, way less time consuming. You don't need to be glued to a screen all day.
That's precisely the distinction the sources make. For most people, particularly beginners or those without tons of time or specific expertise, investing in broad diversified funds is presented as simpler and statistically safer.
So the takeaway recommendation seems pretty clear then. For newcomers, maybe start with investing.
That's definitely the strong suggestion. Diversified funds are the usual starting point mentioned.
It acknowledges the allure, the excitement of trading.
Sure, the potential for big, quick profits is tempting.
But it really hammers home the risks and the sheer effort needed to even have a shot at succeeding consistently.
Absolutely. And it mentions paper trading, too.
Right. Trading with fake money.
Exactly.
Yeah.
To test your strategies, your discipline, without actually losing your shirt. See if you actually have the stomach for it.
That sounds like smart advice. Test the waters first.
Definitely.
Okay, so we've got this picture. Trading active, skillful, high risk, high potential reward. And investing patient, long-term, less demanding, historically steadier. Two very different ways to approach the markets.
Completely different philosophies, really.
It really makes you think, doesn't it?
Yeah.
Considering all this, what does financial success actually look like for an individual? Is it the thrill of the chase in trading?
Or is it the slow, steady build-up through investing?
Yeah. How you answer that could really guide your whole financial path, couldn't it? Something for everyone to consider.